Now, we all know the real estate business has been a roller coaster for the last year. In fact, it's been a roller coaster for the past 3 years, from the COVID pandemic to the years after, the pure insanity of 2022 and the complete drop-off in the end of 2022, followed by what the heck is going on in 2023 with rates increasing and house prices increasing. It all doesn't make any sense anymore. But I'm going to explain to you the 5 things that would have to happen for the market to completely continue taking off in 2023. Now, as a caveat, obviously all of these are implied. We don't know for sure or a fact that these occurrences will happen. And of course, these are just my suggestions, so please don't take this as financial advice. At the end of the day, if these things do occur, I do believe that the market will really take off in the fall of 2023. So let's get into it, shall we? First and foremost, immigration. In the Canadian economy, we have seen more immigrants come into the country in the past 6 months than in many cases over the past couple of years. Canada has publicly indicated that they were going to bring in over 500,000 people per year for the next few years, and it's been well reported that we are well above those numbers. So if we continue to see the mass levels of immigration, these folks need to live somewhere. Now, from a mortgage perspective, most immigrants are not buying real estate in the first 6 months. But with the New to Canada programs, we've seen more people than ever buy 6 months, 12 months, and 18 months into their living situation. But more importantly, these people do have to live somewhere, and we don't have enough housing to place them, which means that rental rates will continue to grow, which means more people want to buy real estate, which ultimately fuels the price of real estate. Number 2, mix in a little bit of unemployment. Listen, one of the biggest challenges that we've been seeing and why CPI is remaining so high is because unemployment is remaining stubbornly low. That's one of the reasons that we've seen interest rates go up and the Bank of Canada keeps raising rates. So if we just start to see unemployment slowly start to increase, this could cause the Bank of Canada to stop increasing interest rates and at least lay low long enough for the market to stabilize. Now, we don't recommend or we don't want to see anyone lose their jobs, but we know that's the reality of a higher interest rate economy where inflation is starting to go down and people are spending less money overall. If we see that happen, we imagine that we would only want to see it happen just enough that it pauses things, puts some positivity into the marketplace, and we don't really see much in the way of foreclosures. Number 3, reduced higher interest rates. Well, if in fact we do see the government stop raising interest rates and stay steady for some time, we could see the bond market start to react positively, which would mean a stall in increasing interest rates and perhaps even a slight dip to back what we saw in the spring with fixed rates in the 4s or even the 5% range instead of in the high 5s and the 6% range. This would mean that you'd see more market positivity. You would also see buying power come back with a stress test, and just generally speaking, people would be able to afford more on a monthly payment basis. Number 4, it's a bit of a wild card, and it could be international in many situations, but if we saw the economy avoid high oil prices and any other major market turmoil, it could mean that again, the market is more steady instead of experiencing higher price points in a variety of different goods and services. As we all know, when oil prices go up, virtually everything also goes up in turn because of delivery and freight and so much more. Now, obviously, there are other major economic world events that could occur that could keep interest rates high, such as undetermined or unknown wars or anything of that nature. Again, we hope that these things don't happen. And if they don't, this could be another positive contributor towards the real estate market in Canada. One of the other factors when it comes to inflation, of course, is increased income. We're seeing more people get bonuses and raises more than ever with the increase of cost of living and the increase of cost of goods, and companies generally speaking profiting more than ever. People are asking for more money to keep up. And if this continues to happen, well, guess what? They will be able to continue to afford buying houses and buying real estate in the cities that they're living in. We anticipate that if we do see real income gains continue, we will also continue to see house prices go up. And a bonus, number 6, this one, well, honestly, at this point right now, I wouldn't be shocked if it did occur, but if it didn't, it would be another nice bonus for the real estate environment. And that is not seeing any other regulatory mortgage changes or real estate changes. Listen, as it comes to house pricing, the government tends to focus primarily on regulatory changes in the mortgage world instead of dealing like the actual problems like building more homes. So if we do see the regulators come in and provide more different regulations, rules, and restrictions around lending, we could see that slowly table off the potential value of real estate increasing. Now, what I would love to know is, what are your thoughts on these factors? Do you think these are things that will impact the real estate environment? So if you want to let me know in the comments specifically which one you think is most likely or least likely, I'd love to hear from you. And by the way, if you're looking for more information just like this, make sure to follow the channels below. And of course, reach out to my team if you're looking for expert mortgage advice at Flow Mortgage Co. We'll see you on the next video.